Now, I can assure you that this strategy is not complicated or difficult to learn at all. Probably one of the easiest you've learned, if I may say so. It only uses just one indicator, namely the RSI. And my operating time frame is 60 minutes. Now, can it work on other time frames? Maybe, but I have not tested them personally, so I cannot tell you whether it will work on 5 minutes, 30 minutes, whatever. I only tested it on 60 minutes. Alright, let's talk about the rules. As soon as you see the candle close with RSI crossing above the 50% level, that's your cue to go into long. Similarly, get into short when you see the candle close with RSI crossing below the 50% mark. That's it. It just cannot get any easier than that. Now, the only thing that you have to do is to set up your chart to have the 50% line drawn across the RSI indicator and use the 14-period RSI, which is pretty much the default RSI setting for most of the charting programs nowadays. So here's a price chart with the RSI indicator on it. There's the 50% line, which you probably will have to draw them manually, depending, of course, on which charting software that you're using right now. Just ignore the two horizontal blue lines at the 70 and 30% levels. We don't need them. They are there simply because I just could not figure out how to get rid of them in Metastock, which is the software that I use to plot this chart. Okay, now that we have everything that we need to make trading decisions, I'm going to walk you through all the setups that are on this chart so that you'll be able to understand better the concepts of this strategy. Now, this strategy is based on the stop and reverse concept, where we will always be in the market after the first signal, either in a long or short position. I'll show you what I mean right after this. Okay, here's the first signal. A short setup once we see the RSI crossing below the 50 level here. So here's how we're going to do this. As soon as I see this setup, I'll place a market order to get on board. This trade will remain open until we see RSI setup in the opposite direction, which in this case is a long setup right over here. So when this takes place, you want to exit your short position and immediately enter into a new long position. If you're a little confused at this stage, then just stay with me for a moment. Let me give you an example. Say you had entered your short here with one contract. Okay? As soon as you see the long setup over here, and assuming your money management plan only allows you to trade just one contract at a time, buy two contracts. The first is to exit your short position, and the second is to open a new position, which is long in this case. Alright, now let's pause for a moment here. Note that the way we are trading here has an element of risk control built in. A short position will be stopped out fairly quickly in a rising market because the price will rise above the 50% line, generating a stop and reverse signal. The same holds true for a buy signal in a falling market. So basically, we don't need to set our stop loss and take profit orders here. It's all conveniently built in. How's that for simplicity? You only react when there is a crossover to either side of the 50% RSI line. Let's move on to the next trigger. We have a short trigger, only to be immediately followed by a long setup. Now, this type of scenario would be common in sideways markets, and you just have to grit your teeth and exercise discipline in executing your trades when the chart tells you to do so. Now, as this is a trend following strategy, expect to have more losing trades than the winners. I mean, that's just the way it is. How we make money is when a trend does come around and we ride it, as we can see right over here. Next, a short setup that signals the end of this trend, followed by a long setup that signals the start of another trend. That's what trend trading is all about. Taking multiple small losses and capitalizing on trends. And when you do get monstrous trends once in a while, and they do happen, this is the time to recoup back all the small losses and have a lot of leftover to spare as well.